Rajesh Kothari, Managing Director of ALFAccurate Advisors, joins us on the show now. Hi Rajesh, good morning, and thanks a lot for joining us today on Bloomberg Quinn. A lot of cues coming in, some positive. Global cues this morning have been positive. In fact, the focus point today has been the banking space in light of the new RBI circular which have been issued after the February 12th circular were quashed. Let's first start off with that and take us through your views and what you made of the new circular and what is your view on the banking space going ahead.
I think banking space, one is to divide between three parts. One is private sector banking, second is public sector banking, and third is the NBFC space. The private sector bankers, by and large, is going to contribute to the most of the bulk of the growth in Nifty in FY20, particularly starting by 1Q itself. So while everybody is expecting Nifty to report 18, 20 to 25% earnings growth in FY20, I think 75 to 80% of that growth will come from private sector banks because of the probably low slippage, significant high provision during last year, so on and so forth. Second space is public sector banks. I think here there is going to be a lot of consolidation which is going to happen because that's what the theme of the last term of the government as well. So while we have seen one consolidation, which is Bank of Baroda and Vijaya and Dena, there might be a couple of more consolidation over probably next 2 to 3 to 5 years. So in this space, one needs to be really very, very selective. Of course, the large PSU banks, of course, largest among them, number one and number two, they are better placed compared to playing any other banks. And last but not least, the NBFC space. And in this space, except one or two leading players, most of the other companies are right now having some issues or other due to the liquidity crunch. And I think the mid-level within NBFC space, who are also leaders in this space, they are coming out well from this liquidity crisis. And of course, the players who were kind of very weak players, they are definitely suffering from this entire liquidity crisis. So again, in this NBFC space, one can look at very, very selectively, rather than playing the entire NBFC space. Remember, a few years back when the interest rates were coming down, the entire NBFC sector, they significantly outperformed because bulk of them, they were relied upon the bulk borrowing, and as the rates came down, it directly helped them. But probably this time it is not going to be the same story because they are losing market share, the liquidity is still not available to them, and therefore it is still tough days for NBFC space, in general. So you need to be very, very selective when one is buying NBFC space.
Rajesh, you spoke about the liquidity tightness issue because of the NBFC space. This has had a knock-on impact on sectors like housing as well as autos, and focusing particularly on autos, we've seen now the news coming in. M&M it will be observing production cuts of about 5 to 13 days at various plants. If you look at the production numbers of Maruti for the last month are down about 18%. Do you think the pain will continue in the auto space, which is also witnessing its biggest slump that one has seen in the last 5 years, or sector could see a revival starting from the second quarter of FY20?
So I think as far as automobile sector goes, one needs to look at not at production number, but actually what is happening on the on-ground retail numbers, because the inventory is now coming down. So if you look at from October onwards, while the numbers were strong, the inventory was also going higher. And I think probably entire auto sector, they underestimated kind of a slowdown, the impact of NBFC crisis, impact of a hike in insurance cost, and so on and so forth. So the inventory levels were significantly higher levels. But in last couple of months, inventory is now becoming more of a normalized levels. So while there might be production cut to be witnessed by many auto players, the inventory at I would say retail level is already reducing. And maybe from 3Q onwards, you will see better growth in automobile sector. Please also remember that automobile sector historically has been the structurally compounder story. So it is not a cyclical story, it has been structurally compounder story. And whenever any such sector, which is a structurally compounder story, goes through a kind of a transition zone or a short-term pain zone, normally speaking, that is a time when one needs to look at that sector for real long-term story for another next 3 to 5 to 10 years. So I think we are watching this space very, very closely, and probably will be adding into a few names, the leaders of the sector, of course, and probably again, it is going to be buy decline kind of a story.
If I can take a follow-up that Rajesh, good morning, Neeraj here. The leader of the space, I don't want a view on whether you will buy or sell Maruti. I'm just asking you, I think Mr. Bhargava told us that one of the key issues for first-hand sale of cars is proving to be people glued to their cell phones and therefore preferring shared mobility and not driving their own cars unless you can afford a driver, which is a very small percentage of the country. Two, the last 3 days when I've used shared mobility, a lot of the cars have been Tata cars as well. Tata is gearing up in the passenger vehicle segment in a big way. Hyundai is already giving that competition. Will the next 5 years be different for Maruti than what the previous 5 years have been?
Well, if you look at the penetration of car in India is still very small compared to any other country. So from industry size opportunity perspective, the size is going to be huge, and I think this industry can keep growing at a high single digit or a little bit maybe 11-12% kind of a double digit growth. So opportunity is still very high from penetration perspective, from aspiration perspective, from even the cost of funding as and when it comes down perspective. So that remains story intact. Now, as far as the market share goes, I think Maruti was leader, is leader, and in my view will continue to be a leader. I'm not trying to say that there is no competition. Competition was intense in last 10 years. Many MNC, they have to close out their shop in India. Please remember it. Few large leaders within MNC space, they decided to exit from probably low end or mid end and focusing now only on the premium end. If you look at the return on investment from dealers perspective, if they are dealers of Maruti Suzuki, their return on investment is significantly higher compared to any other dealership, whether it is a Korean name or whether it is a Japanese name. Of course, even the competitors, they have been hearing from last 10 years, they are also scaling up their game. But opportunity is big, and I think it is always survival of the fittest. Last but not least, if you look at the model launches by Maruti at the right price point, for example, Ertiga is a classic example versus Innova. Aspirations are increasing, and that leads to more SUV kind of a growth. Innova, of course, has been doing extremely well, but Ertiga also got its space, very rightly. So I think Maruti will continue to remain a leader in this space. And last but not least, if you look at from EV perspective, I think Maruti Suzuki probably will be the first one to launch, I would say, a right price point EV. So even from that future perspective, I'm not too much worried, from Maruti perspective. So kindly put a disclaimer, because we hold Maruti for our PMS clients, and we continue to remain positive. It is a good stock to buy at declines.